Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The bullish sentiment from the Australian dollar gained further ground last week after clearing the 77.45 level, posted a doji and then looked up towards 77.90 resistance on Friday. Earlier in the week, modest gains were seen after the Chinese president said that last week he intended to open up its economy and push for free trade. This did ease the tension between the US and China's trade wars. Other tension, which I will get to in a moment, is with Syria. But first of all, looking at the price action with the Australian dollar, is the fact that we've got a shooting star and also a rejection from near the 60-day moving average at 78.22. Although the market is slightly poised to the upside this morning, from the open of 64 up towards 80 high on an intraday, the fact is that the market clearly did fail above 78. This week we've got some economic numbers out with the unemployment on Thursday. We've got Chinese figures out tomorrow, which is for the first quarter economic growth, fixed asset investment and industrial production. Along with that, we've got the RBA to publish its minutes of its latest policy meeting. That's tomorrow also. From a technical point, I think the market for the Australian dollar has fell to the upside. And if we do get a confirmation from this shooting star, and that would be from a break underneath the shooting star, as well as where that doji is on the close, at 77.50, this would give implications that we are breaking down further and looking towards 77.25 to 76.75, with a broad base still holding at 76.30. It is quite surprising that the US dollar index has closed pretty much unchanged at 89.48, and also to the fact is that euros hardly moved as well. The situation on Friday or Saturday morning in Sydney is that the United States, Britain and France struck coordinated airstrikes at Syria, and in response to the alleged chemical weapons attack that believed to be carried out by the forces aligned by the government of Syrian President Bashar al-Assad. It is expected that Russia may comment further to this strike, but at the moment, little has been said. But looking at the technical point, well, the euro is unlikely to change in the next 24 hours at 123.05 to 123.65 intraday range. And I still hold bearish and still look towards this region of 122 eventually. As you can see, it's taking some time. The dollar yen bulls have come back this morning and now look towards a 107.70 resistance. We have got a high of 58 and not quite broken the top side as of yet, but a break above 70 would trigger a rise up towards 108.55 or even towards the region of 109.15. Support on the day comes in at 106.55.60 and still offers a potential base in the intraday. Well, the pound has gained higher over the last 6 or 7 days, but still is contained by the resistance of 142.90. Nevertheless, the market is still waiting for further information from the EU and UK on the Brexit talks. And I don't expect to see any negative outcome, but more positive. If that's the case, then we could see a further gain towards the upside if the talks go slightly smoother. But if they turn out to be on a sour note, this could easily derail the British pound and see it fall back towards that uptrend at 140 figure 20. Above 142.90 comes in at 143.65 to 144.5. Well, this merry-go-round of bulls and bears still continues for gold and also for silver. And as you can see from the fact that we're still in a 13 figure to 13.65 after spiking there last week, with the geopolitical tension with Syria, with the US, has caused some concerns. But as a safe haven currency, the market still is anticipating some kind of comment from Russia. If so, we could easily see a stab to the upside, but it's not likely to break that level of 60.65. Overall, I do expect to see a pullback to 38 or maybe down to the recent lows of 31. Silver still maintains in this range of 16.15 to 16.85, but I feel this time around, if we do get a challenge to the upside, we will break this level of 16.85 and continue on to $17. I'm slightly more bullish with silver than I am with gold, but nevertheless, we're still playing in this range though of 16.15 to 85. Rounding off with oil, not as bullish this morning, but nevertheless, it's still maintained above $66 a barrel. I'm not fully supportive for oil, purely for the fact is that on Friday, and it was one of the most anticipated reports, I believe, in the market, is that General Electric Baker Hughes Energy Service released its report on the US drillers. And from the report, 7 more oil rigs were added into the report, and saying that from April the 13th, bringing it to a total of 815. Further supply, this suggests, and this is the highest level since March 2015. So I believe that the rise in US output will put some dampeners to the upside. But the longer we maintain above $66 a barrel, could see $72 a barrel in the near future. But we'll see how this plays out in the next 12 to 24 hours. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you have a great start to the new week.